Crypto market crash, causes and future outlook. When Bitcoin and Ether lost 4% and 2% of their value last week, respectively, it seemed insignificant. 7 days later, the trend worsened. What caused the crash? Is crypto winter approaching? Bitcoin. In the 7 days from June 28 to July 5, 2024, Bitcoin fell by over 9.5%. It failed to consolidate around $60,000. The world's largest cryptocurrency by market capitalization dropped to 4-month lows, below $54,500. BTC has not been this low since late February. What caused such a dismal development? There are several problems. The first is the increased number of liquidations, forced position closures, particularly concerning longs. In the last 4 days, July 2 to July 5, shorts were closed at $57.31 million, while longs were liquidated at $270.698 million, 4.72 times more. This continues at the time of writing on July 5. The story of the outflow of money from spot Bitcoin ETFs also continues. While the amounts are not astronomical, the last inflow was observed on July 1, the last day before the price crash. On July 2 and 3, the outflows were $13.62 million and $20.45 million, respectively. Another reason for Bitcoin's price drop is declining miner revenues. After the halving on April 20, daily Bitcoin miner profits fell by 63%. They had to sell their reserves. According to CryptoQuant, this was the highest level since May 2021. However, not everything is bad. CryptoQuant also noted a decrease in the hash rate, which they consider a bullish signal. They cite the example of late 2022 when a similar hash rate drop was followed by a 300% Bitcoin price increase over 15 months. It's possible the situation will repeat in 2024. From a technical analysis perspective, Bitcoin is in a bearish trend. In mid-June, the price broke below the 50-day moving average, and this week it fell below the 200-day average. Thus, a decline is most likely in the short and long term. The nearest support levels on the daily chart for BTC are $53,000, $50,500, and $49,000. The resistance level is $56,500. The Fear and Greed Index dropped by 18 points compared to last week, to 29. This indicates that fear has gripped Bitcoin investors. Ethereum. From June 28 to July 5, 2024, Ether entered freefall, losing over 13% of its value. The first half of the week did not foreshadow such developments. The price held steady. But the last 3 days were disastrous, a decline of more than 14.5%. The main reason for the fall is the crypto market continuing to follow Bitcoin. If the world's first cryptocurrency crashes, altcoins support the trend even more. This is unsurprising, considering BTC continues to occupy over 50% of the market by capitalization. Ethereum's situation is more interesting. A new wave of hype around spot ETFs has risen. The U.S. Securities and Exchange Commission sent ETF applications for revision by July 8. And firms have already begun making changes to the infamous S1 form. Bitwise was the first to submit a corrected version on July 3. Various experts have started speculating when Ether ETFs will be launched. Bloomberg Intelligence ETF analyst James Seifert believes the launch could happen within 1 or 2 weeks. More cautiously, his colleague Eric Balchunas stated, "No one knows why the SEC is taking its sweet time considering how mild the comments were. The funds could easily be trading right now. The problem may lie with one slow issuer holding up the process, or summer laziness/vacation. Not sure." Given this, all signs point to a launch this month. More details will be known next week. Galaxy Digital Asset Management Company head Steve Kurz believes the Ether ETF launch process is quite methodical. He predicts that exchange-traded funds for the second largest cryptocurrency by market capitalization will be launched within a few weeks, already in July. From a technical analysis perspective, Ethereum shows complete seller dominance. This is evident from the price falling below the 50-day moving average. The RSI indicator is also dropping. A trend reversal can be hoped for if the price remains above the $2,815 support level, aiming for growth to the $3,355 resistance level. Chainlink. Over the past week, Chainlink cryptocurrency lost nearly 18%. At the beginning of the week, the altcoin attempted to grow. The price approached $15. However, a collapse occurred from Wednesday, and the Chainlink token fell to its 2024 annual low. On July 3, it was announced that Chainlink had partnered with investment company Fidelity and Bank Sygnum. Clients will be able to track the net asset value of the fund in real time. This is a significant indicator calculated as the difference between asset value and liabilities divided by the number of outstanding shares. In most traditional investment companies, this is calculated at the end of the day. Fidelity will be a pioneer. The data will be available in real time only to Sygnum Bank clients. Analytics platform Santiment summarized the month's development activity. In June, Chainlink demonstrated progress. In May, the project was fourth among all cryptocurrencies, now it has risen to second. Note that activity is measured by the number of events on the GitHub portal. Among all ERC-20 standard projects, Chainlink ranked first. Its monthly events totaled 560.6, while the second project, Status, had 385.97. Hedera remained the absolute leader in developer activity in June, as in May. Another analytics platform, LucanChain, recorded unprecedented demand for Link. Over 7 days, 2.08 million tokens worth over $30 million were withdrawn from Binance. Evidently, institutional investors are interested in Chainlink. However, this has not yet been reflected in the price. This can largely be explained by the constant increase in the number of Link tokens in circulation. From a technical analysis perspective, Chainlink, like Ethereum and Bitcoin, is in a bearish trend. This applies to both long-term and short-term perspectives. The price decline below the 200-day and 50-day moving averages confirms this. Resistance and support levels are $14.80 and $9.60, respectively. Conclusion: bears have completely taken the initiative in the crypto market. Positive news is lacking for growth. High inflation, rates, and confusion with Ether ETFs add uncertainty and, consequently, cause investor panic.